Wow, here we are, another day and another pie video. Now I realize I've had a lot of pie videos going on recently, but frankly, I mean the price action, a lot of the volatility, a lot of the volume, basically everything that we're seeing out of the pie network recently is the most interesting thing that's happening in an already interesting crypto market, but in a crypto market that hasn't really done too much. And so I wanted to focus on what is exactly going on with pie because, at least in my mind, I think it's got a lot of eyes on it right now. Some recently negative and now coming back to positive. So I want to talk about kind of this complete whiplash we're seeing with the pie price chart, and we're going to go in and talk about that in a little bit more detail and how you should be staying safe, because right now I think a lot of what we're seeing is purely price manipulation. We'll talk about that here in a second as to why I think that is, but there's a lot of crazy things that have been going on recently with pie. So anyway, we're going to go on ahead, we'll dive right in. Starting out, it's very, very easy to see. Yesterday this looked basically the exact inverse, right? I mean, most of the market was green and pie was very, very red. Now we're seeing pie is very, very green and the most of the market is red. So pretty interesting. It seems to me like pie is moving at the inverse of whatever the market is doing. It's like an inverse beta. If the market goes down a little bit, pie goes up a ton. If the market goes up a little bit, pie goes down a ton. Very, very, very interesting. But as we can see, up 42% on the day. Absolutely insane move. If we do look at the week, we are still down 17%. This is kind of more in line with what we've seen out of kind of the rest of the crypto market. But overall, still pretty impressive. And then if we look at the month, down 63%. So still a really rough move to the downside. If we do go look at the pie price chart, we can see kind of exactly this. If we just look at the hourly, basically down only, we saw kind of that really pretty punishing overextension down to the bottom. And then basically right after that, we saw a really, really strong push back up to the upside. Right now, it does look like we are starting to do a little bit of a consolidationary type of thing right now. If we take a look, we can see, kind of something like that going on. And then we can also see kind of something like this happening. Definitely looks like we're consolidating, kind of in like a wedge formation. We are at the very, very tip of that right now. So kind of where this goes from here is going to be quite telling. Given the market that we've seen recently, I'm not expecting it to break up, but we have seen some pretty decent momentum coming out of pie recently, so we'll just have to see. But if we do go back to the daily, we'll have to kind of rearrange this a little bit. We can see, I mean, it's been basically down only. We are starting to see a little bit of some signs of life here, potentially meaning that we've reached a bottom, but you just never know for sure. And so that's one of the things that I want you all to be very, very careful with when you are going through and starting to trade some pies, because this can very, very often be a little bit of a trap. This is the trap that market makers and smart money and all of these institutions or whoever will do sometimes, is because when we've seen something like this, now what I mean like this is like this, right? Down only, really, really ridiculously punishing move to the downside over the course of about a month. I mean, this is a very, very strong move to the downside. And what we can see oftentimes is when we start to see, actually, let me put this into full screen so you can get a better look at what we've got going on here. But you can see when we see such a punishing move to the downside like this, when we start to see a little bit of a relief rally like this, people can get really, really excited and start to throw their money in, start to leverage longs, super leverage longs, maybe even buy in super heavy because they think, oh my gosh, this is the bottom, we've hit it, we're here. And then what'll happen is, we'll see, we'll draw this out a little bit. We might even see a little bit of a trend moving up, and then we'll go down, do this, and then boom, hit another bottom, and then we could start to see a run back up from there. That is oftentimes what can happen, because essentially, whoops, let's not do that. Move it back to this, and we'll get rid of this. But oftentimes what can happen here is they're essentially trying to lull people, especially after we've seen so much of this. Here's a perfect example. You can see sell, really, really aggressive selling. We see a really, nice little spike, get people excited, get people thinking, oh my gosh, this could be it. We're going back into an uptrend, and then a continued sell all the way back down. We've seen this kind of in limited kind of areas here and there. But the reason that this happens is because we get this little bit of a relief rally because people are thinking like, oh my gosh, this selling has been so punishing right now. This has to be the bottom. And then we start to run up a little bit. And then of course it's not. And we continue to see a run back to the downside. So usually what I would expect to see if we are to see a trend reversal is we need to start going back and hitting some levels of resistance that are kind of like semi-reliable levels of resistance. So if we go and we just take kind of a quick look here, we could probably see this is going to be a decent level of resistance right here. We can see this is where we got rejected on this recent run back to the upside. Probably a level of resistance coming kind of like in this area. Generally, you can see kind of some things touching there. Probably a level of resistance kind of in this area as well. Again, none of these like super strong levels of support or resistance, but these are probably some decent levels of support or resistance. Obviously up here, we're going to see kind of this little zone. This is going to be a nice little support and resistance zone. But that's kind of what we got. We need to start to see some level of momentum coming back into these. So maybe some level, again, if we're going to go back to drawing some pictures here, maybe come back, come up here, ideally not get rejected again, break through this, come back up, maybe even make a run all the way up to here, get rejected, come back down, establish some support on this line, maybe take another run at it. Same type of thing, come here, come down, maybe even do something like that. Establish some support, something like that. This, in my mind, this would be very healthy price development for the pie chart. So just something to think about whenever you start to see a little bit of a relief rally like this. Just be very, very careful that you're not getting suckered in, because this oftentimes can be to kind of get people to get excited, play some, too over leveraged long trades, and then we start to see this little bit of a pullback. People get liquidated, and then that's kind of obviously the intention here. You can see here though, one thing that I will mention is usually when I'm trading on the hourly, it's not as reliable. I'll usually only use this on the daily, of which we've actually not seen this happen yet. You can see if we go and we look right here, we did actually overextend on the daily outside the Bollinger Band right here. This is when we saw that really punishing sell-off. And actually, if we hide the Bollinger Bands and we'll get rid of these wedge lines as well, you can see this is a massively volatile day for Pi, which does indicate that, maybe we are in a pretty strong level of like both support and resistance, right? Obviously, we've seen a bunch of selling. Now we're seeing a bunch of buying. We think we might have found a bottom here, but there is still a pretty decent bit of sell pressure here, which is why we're seeing such a strong level of volatility in this one single candle. Now, what we can see if we turn Bollinger Bands back on is we did actually extend outside on the bottom of this, but we did not get into overextended or oversold, on the RSI. Usually what I'll do is when I will trade, especially if I see this happen on the daily, it's almost an immediate buy. And then if we get into overbought and outside of the Bollinger Bands to the upside, it's almost an immediate sell. I have found that this is a very, very simple, somewhat reliable way to trade. Now, what we can see here on the hourly is that this exactly happened, right? I mean, we came back down here. We were about 15 here when we were getting oversold. We were outside of the Bollinger Bands. And then we came back up. We likewise overextended to the upside here, getting up to about 80, 81, and outside of the Bollinger Bands. And then, of course, we come right back in. So this could have been a really, really easy and highly profitable trade that you could have taken. Now, again, as I've mentioned here, we have seen this before. We did not get back to the upside here. But if you would have held this, you could have bought more down here. And then, of course, you would have been in profit on both of those. So a pretty interesting strategy. This is something that I've kind of been mentally monitoring over the past several months just to kind of see how it works. It seems to be pretty reliable. Like I said, very, very reliable on the daily. Hourly, a little bit less so, like I mentioned. Here we could see potentially a good buying opportunity, but we would have had to wait all the way up until here to actually be able to sell it. So that would have been about a 2-day trade. This one here would have been about 10 hours. So this would have been a really quick, really profitable trade. However, when you do take a trade like this, for example, if you do too high of leverage, this potentially can get you liquidated, because if you see here, we did actually come down a fair bit further before actually coming back to the upside. So if you are trading on isolated margin, then that likely would have gotten you liquidated, unless you took something that was probably only about 2 or 3x leverage. Maybe even 4x would have been all right. But you just have to be very, very careful when you are leverage trading if you are looking to take some of these short-term swing trades. So anyway, that's kind of what we're looking at from the Pi price chart. Really, really interesting things going on here. If you are interested, I do have the links in the description below. BTCC, you can trade Pi as seen here. You can actually do leverage up to 50x. Again, like I said, I usually don't do leverage that high, usually about 20 to 25 is where I'll stop out. But if you are interested, 10% bonus on first-time deposits. Really, really great, really great deal there. Also up to $10,000 in trading bonuses as well. I also do have Phemex and WEEX below. I don't believe either of them have Pi yet, so if you are looking to trade Pi, BTCC is definitely the way to go. Now, one thing that I will say that you should just be careful of, as I kind of mentioned from the chart, but also from a bit of a social sentiment perspective here, what we can see is there's a lot of people, this is starting to be a little bit of the sentiment that we are seeing in the cryptoverse and the Twitterverse, all that type of stuff. You can see, wow, Pi is mooning, 50% up, volume is going parabolic, real breakout now, $1 is next for sure. Now, I'm not saying that this is not possible. I'm not saying that I don't believe in the long-term possibilities or the long-term prospects of Pi, but we just need to be very, very careful, because as I just mentioned when we were looking at the chart, this is the type of thing that will happen, right? Obviously, very, very, very punishing moves to the downside, and then we start to see a couple green candles, and everybody's like, oh my gosh, this is it, the breakout is here. When realistically, we haven't really seen an indication of trend reversal yet. And so that is the most important part, that when we are looking at the Pi price and the Pi chart, all that type of stuff, we need to be really kind of analyzing for that. Now, of course, if you are looking to trade Pi and you are looking to be maybe a little bit more risk on, or kind of risky there, you could have, again, if we go back to the Pi chart here, let me reformat this a little bit, but coming back to the Pi chart here, you could have probably taken something down in this range. This could very likely be the bottom. We don't know for sure, but this could very likely be the bottom. However, if you are looking to trade more like in a more reliable type of method here, we have not seen that trend reverse yet, right? And so this would have been a risky place to take a trade from a sense of like a pure technical analysis perspective, right? However, as I did mention in the video that I made yesterday, when we were kind of talking about this happening real time, we had not actually seen this follow yet. When we were talking about this in real time, I did kind of make the comment or make the mention that this realistically could have been kind of that overextension and final capitulation to the downside before we start to see Pi price recover just a little bit. And so anyway, that's just something to think about. Obviously, we do not want to fall into this trap just because we see a couple of green candles. We just really need to make sure that we're not getting too excited. We're not over leveraging ourselves. We're not going in too heavy. We do want to see that sign of trend reversal first. So anyway, like I said, hopefully this information was helpful and useful for you. If it was, a like and a subscribe really, really do help me out. Also, I'd love to hear your feedback in the comment section below. What do you guys like that I talk about? What do you wish I would kind of skip over or maybe not cover as much in depth? Is there anything that I'm missing that you'd like to hear more of my thoughts on? Things like that. I'd love to hear you guys' feedback. If there is anything, I do read and respond to all of those. So please just drop those in the comment section below. And also, like I said, that like and subscribe really, really do help me out if you find the information in my videos useful. So like I said, I thank you guys for tuning in, and we'll see you in the next one.